Welcome to the Bull Strangle strategy. Our approach combines stock ownership with systematic option selling to generate income while maintaining long-term market exposure. Every trade follows a repeatable process built around stock selection, premium collection, risk management, and disciplined execution. Let's get started. Over the past several months, we've explored 7 stock characteristics that have historically improved the probability of success for a stock and option income strategy. But identifying quality stocks is only the beginning. The next question is even more important. How do those stocks become a disciplined, repeatable portfolio? In this new series, I'm going to take you behind the scenes and show you the complete process from screening thousands of stocks each week to building and managing a diversified portfolio designed to generate consistent option income. Many investors spend their time trying to predict which stock will make the biggest move next. My approach is different. Rather than trying to predict the market, I focus on building a repeatable process. Every Monday, the same sequence of steps is followed. The same screening criteria, the same decision-making process, the same risk management rules. Consistency, not prediction, is the foundation of long-term success. The portfolio also operates differently than many traditional option strategies. Instead of opening an entire portfolio once each month, new positions are added every Monday and typically held about 4 weeks. That creates 4 overlapping groups of positions. One group has just been opened, another is 1 week into the trade, a third is approaching expiration, and a fourth is being closed as new positions replace them. This staggered approach helps reduce the impact of market timing while creating a more consistent trading rhythm. Every week begins with roughly 5,000 optionable stocks and ETFs. From there, objective filters gradually narrow the list. Stocks with poor option liquidity are removed. Companies reporting earnings during the holding period are eliminated. The remaining stocks are evaluated using the 7 ranking metrics we've covered throughout the previous series. Finally, sector diversification helps create a balanced watch list of approximately 15 to 25 candidates. At this point, no trades have been placed. We've identified the highest quality opportunities. The watch list is only half of the process. Next comes selecting the right option contracts, choosing objective strike prices, determining position sizes, and balancing exposure across multiple sectors. Each decision is guided by predefined rules rather than emotion or market forecast. The goal isn't to find the perfect trade. It's to build a portfolio where dozens of disciplined decisions work together over time. This article is the roadmap for everything that follows. In the coming weeks, we'll examine every step of the implementation framework in detail. We'll look at how thousands of stocks become just a handful of opportunities, why earnings are avoided, how options and strike prices are selected, and how the entire portfolio is managed from week to week. If you're looking for a more disciplined approach to generating stock and option income, I think you'll enjoy the series. Before you go, continue your Bull Strangle journey. Visit bullstrangle.com to receive weekly stock selections, option selling opportunities, and ongoing research designed to help investors generate consistent income. For a complete step-by-step guide, pick up a copy of the Bull Strangle strategy, which is available on Amazon. Research, discipline, consistency, income. Thanks for watching, and we'll see you next time.